Hey guys, welcome back to another Trading Edge video, your weekly outlook of the markets. Today we're going to talk about two classic pattern formations, one which is a trend continuation opportunity, the other which is a counter trend trading opportunity. And we're going to get started here on the dollar Canada daily chart. And this should look familiar to you guys, right? If you're involved in the live room or if you watch the live streams that we do each day on YouTube, this was an opportunity that we've been stalking for the better part of the week. I got a question earlier this week about Elliott Wave theory, or really a comment saying that, hey, Elliott Waves are the only thing you need to know to be a successful trader. And I disagreed with it. Now, I do have a Trading Coach podcast episode coming out at some point, kind of going into more detail about that. But to put it in brief, I don't believe that there is any one technical aspect that makes you great. It is all about having a vast knowledge base, a vast skill set of knowing different things, being able to put those different things together and make the best and most accurate predictions that you can in the market. And although I don't personally trade Elliott Waves, right, I'm not a wave counter or anything like that, I understand how they work in the market and they could be very helpful at determining what type of moves you want to get in. So kind of a really brief educational lesson on Elliott Waves. Elliott Waves typically work like this, right? You have an extension, you have a retracement, you have a longer extension, which is your middle wave, you have another retracement, you have a shorter extension, and that's either followed up by like an AB equals CD pattern before the market extends again, or maybe a reversal, right? And this is very similar to kind of the basics and fundamentals of how market moves, like Wyckoff theory and stuff, where you have kind of accumulation, a markup, distribution, and a markdown. You can think of it like this, where you have your initial move out, right? Then you have your retracement. And then after that initial breakout, you have the general public that gets involved. This is where you see stuff hit the news and everyone's excited about buying, and you have a flood of buyers enter the market, and then you have a retracement, right? Then you have this last little step up where most of the professional buyers are done. You still have a little bit of newer buyers coming in. And then you have this, again, AB equals CD pattern where either the professionals kind of load up at a cheaper price once again, or they say, hey, I'm not interested, and the people that bought late are burnt. And if you look closely at the situation or the opportunity in front of you, it's a very similar setup, right? We have our extension here. We have our pullback. We have our long second wave extension right here as well. We have our next pullback. And then we have this little failed extension, right here. This could be our third wave up, or our third extension up, where there's not a lot of buying interest. We have a deep retracement. A deep retracement is a sign for another sign for a slowing trend. So two signs for a slowing trend. One, shorter extensions. Two, right, deeper retracements. Then we have a failed extension here. You can see the price tries to push up, but fails to reach our previous highs. And then we have another move back down, ultimately breaking our neckline. So Elliott Wave theory can help you interpret this situation, but this is also a classic pattern in the market called a head and shoulders pattern, which is a classic reversal pattern that occurs when the markets run out of steam. So the break of the shoulder line, or excuse me, the neckline right here confirms the pattern. And what we're looking for is a continuation of this reversal. And one way to identify targets for this is to take your Fibonacci extension tool from the head up here to the right shoulder touch, or right neck touch, excuse me. And then you can look for a move to your 127 Fibonacci extension, which is right here in yellow. Pardon the other fibs on there. We're doing some trade plan review stuff, and those were needed in there. But the 127 is a good conservative target. The 1618 is a good aggressive target for this move. And of course, you want to pair that with other technical tools as well, such as structure analysis. So good head and shoulders top right here. We did violate the neckline here on the daily. So look for a continued bearish movement as we get into our week. Speaking of week, we do have a 1 week free trading workshop coming up starting November 14th. I'll put a link in the description box below, but sign up right now. It is 4 days. It is free. It is completely online. The best way you can learn is if you join us for the live sessions. That way you can interact with us. You can ask questions and whatnot. But if you can't make it, or if you just want to have something to review, don't worry. Each of the sessions will be recorded. Each of the sessions will be posted after the day is complete. So you can always go back and review on your own. So November 14th, register at www.tier1trading.com. And of course, I'll put a link in the description box below as well. So the next chart I want to take a look at is going to be here on Bitcoin. And this is interesting because, again, another podcast is going to come out called Is Crypto Dead? And this was another conversation we had in our live room as we were kind of going through the week, and we were like, man, I haven't looked at Bitcoin in a while. We haven't really done much. And the question that I had, or the discussion that we had, not to ruin it all, is that is the crypto market dead, or are we in another consolidative period, which we've seen historically, and we're getting ready for the next pop? Speaking of the next pop, that's exactly what we're potentially looking for here on Bitcoin on the daily chart. But price action has done something interesting, right? So we've come down and we've consolidated, right? Consolidation, we haven't really gone in any type of directional movement. We've kind of go up and down and up and down. You look at this from the bigger picture, you'll see the same thing. But our most recent move was this, or our most recent moves with an S were this, right? One, we cleared these highs, right? The middle highs of our consolidation right here, giving us a higher high, higher close, causing us to expect a move up. If you guys are unfamiliar with me as a trader and kind of the rules we teach for technical analysis, we have rules for identifying trends. We have rules for predicting where price is going to go. We call it identify, predict, decide, execute. These are black and white rules that help us predict where the market's going to go. One of those rules are the higher high, higher close, meaning that if we get a higher high, higher close above a previous level of structure, as in this case, then that allows us to predict that price is likely to go higher. The next phase of our prediction is that if price is likely to go higher, then where are we likely to go to? And then we got to use the rest of our, technical ability to predict that. But the first part is just making that prediction of which direction is price likely to go. And if we can make that initial prediction, it makes life so much easier from a chartist perspective, because now we don't have kind of, conflicting views. We're not looking for bullish and bearish opportunities. We're locked in on a single side of the market, and we can give it our full attention. But you can see that we have a higher high, higher close right here, which allows us to predict that price is likely to go higher. We then get our pullback in the structure. Boom, boom, boom. Look left, structure leaves clues. Previous resistance becomes support. And we put in another higher high, higher close. So we can just repeat the process here. If we get a higher high, higher close, then we're likely, then we can predict that price is likely to go higher. If price is likely to go higher, then where is price likely to go higher to? And the key, or the answer, is going to be our next key level of structure, which is right up here, right? The area before this big dump off. Now, if we go down to a 4-hour chart and zoom in a little bit, we're going to see another classic pattern here on Bitcoin. This is going to be a flag pattern, right? Price action extends up, and then we get a little bit of relief, right? Again, this little bit of relief is caused by profit taking, right? Profit taking is going to happen. Buying pressure is going to sell out. It's natural supply and demand. Just think about it this way, right? If you were a buyer down here, right? You got it at a very good point, right? Nice little pullback, and you bought. At some point, right, two things are going to happen. At some point, price is going to go high enough where you're going to say, hey, I've got to cash out and take some profit, right? When you take some profit, buyers become sellers. So boom, you have some selling pressure enter the market. At the same time, right, although price was super cheap right here to buy, as we push up, price becomes more and more expensive, attracting less and less buyers, right? Think about going to the supermarket. If something is on sale, you want to buy it right away, and you're going to buy more of it because it's super cheap and you need it. As stuff gets more expensive, there's going to be less interested parties. You're like, I would buy this if it were this cheap, but not at this price. So less buyers are going to be interested, and you're going to see kind of the price get cheaper until it can attract new buyers. And this is what we're seeing in the flag pattern. It's not necessarily a reversal in trend. It's just the market giving us a little bit of relief, the market absorbing some of the new selling pressure caused by new sellers or previous buyers. And we see the market retrace a little bit, right? If you believe in your technical analysis and the fact that, hey, there's no real technical reason that we should reverse right here, then what you're waiting for is for this to get cheap enough for you to buy again, whether that's at a previous level of structure or whether you need to see kind of a violation of this flag pattern before you can get involved. Regardless, there is opportunity to buy Bitcoin here from our current level all the way up to the level that we made our ultimate prediction at which is going to be right up here. So a buying opportunity here on Bitcoin based off this classic bull flag formation. Hope you guys enjoyed. If you guys are new, hit that subscribe button. That way you don't miss any of my latest videos. I update something or upload something almost every day. And if you guys are frequent visitors to the site and to the channel, thank you. I appreciate your support. Continue to show it. One way you can do so is hitting that like button before you leave. And of course, leave me any comments or questions if you have them below. I do go through and read each and every one, and I will respond to whatever you guys type. All right, until then, plan your trade, trade your plan. Take care.